Good morning, everyone, and welcome to another installment of the Prosperity Through Multifamily Real Estate Investing Podcast. I am your host, as always, Real Estate Cody, and with me in the hot seat yet again, coffee connoisseur himself, Mr. Brian Alfaro. Good morning, buddy. How are you?
Good morning, Cody. Nice to see you.
You as well. You as well. So we took a little bit of a brief pause here from the podcast here over the last couple of weeks due to transition of our latest acquisition, and so a lot of other good things going on. But yeah, it's good to be back here in the hot seat. What do you think?
Absolutely. Always exciting to record a new podcast, especially when we have such an awesome guest in the seat today.
Yeah, man. We'll tell the audience who that is.
All right. Today we have the one and only Beau Beery. Did I pronounce that right, Beau?
Okay, yeah, you did actually. Yeah, you did perfect. The Beery. I mean, almost everybody does the Berry, but it's Beery. Beer with a Y.
I had to double check, but let me tell you a little bit about Beau. Beau has been in commercial real estate business in Florida since 1999. He earned a bachelor's degree in marketing and a master of science degree in real estate from the University of Florida. He also holds the prestigious Certified Commercial Investment Member, CCIM, designation. In 2011, he teamed up with Todd Rainsberger, a successful commercial realtor, to acquire an interest in Coldwell Banker Commercial M.M. Parrish Realtors in partnership with the Parrish family. There, he was consistently ranked as the #1 multifamily producer in Florida for the Coldwell Banker Commercial brand and among the top 5 in the nation every year before starting his own private multifamily brokerage firm in 2021. He is regularly asked to speak at industry conferences and to private companies. He also has an ever-growing YouTube channel, which I know Cody and I definitely watch, called Beau Knows Multifamily, where he guides viewers on how to buy more multifamily assets, how to sell them, and how to conduct market analysis. His tours of new listings are very entertaining and widely subscribed, which I can definitely attest to. Beau, welcome to the
show. Thanks, guys. I appreciate it.
Yeah, man. We're excited to have you here, Beau. And what a timely conversation too, at this point in time. We're off to a great start here in Q1 of 2022. Just came off of the highest producing year in as far as transactional volume in 2021. And man, we joke about this. You're a multifamily broker. Would love to hear a little bit more about your background, but I tell all my broker connections, man, it's got to be a great time to be in the investment sales side, just with the amount of transactional volume that's been occurring here over the past 18 months. But with that, man, tell us a little bit more about you and how you found yourself in the investment sales side.
Yeah, sure. Like I said, like you said before, I graduated from the University of Florida, and I actually met my wife during the master's program. My wife was born and raised in Gainesville and wasn't leaving, period. Right. So all my classmates were getting these high paying salary jobs coming out of that master's program. They're going all over the country. And I'm like, I'm in Gainesville. Right. And so what I did was I interviewed with every big dog in Gainesville and Ocala, which is kind of the nearby market. And one of the top guys in the market noticed something in me. His name is Mike Warren, phenomenal investor, had a robust office, retail, industrial, and multifamily portfolio. So I started with him out of school. I actually worked for Trumbull Crow Residential for a few years, then went back, did my master's degree, worked for Mike at AMJ, and brokered and managed his portfolio, and just learned a tremendous amount from the principal side. And I think that's what separates me from a lot of brokers is I have that mentality. I was a buyer for years and years and years. I did all the acquisitions for him. I managed them, right? I know from taking work order calls from a huge industrial tenant, up until doing the acquisitions, the entitlements on developments. We rarely sold, but when we did, I handled those as well. And I did that for 10 years. And he's a tremendous investor, has assets all over the country, a wonderful portfolio. But I got to learn, what he hated and liked about the brokers we worked with, right? And so around 2009, 2010, I started, getting to a point where I felt like I was pretty good at what I did, and I was doing it for one guy. And I started thinking, well, shoot, what if I did this for 10 guys, right? What if I did this for 20 guys? And I was becoming friends with Jay Parrish, who had owned the Coldwell Banker and the Coldwell Banker commercial franchises in Gainesville. It's been in the family for 108 years, right? And this was 2009, 2010 at the pits of hell. And there was a phenomenal opportunity that came up where I could acquire the company with Jay, right? because, it was undervalued. It was very at the bottom of its value at the time because brokerages were going under left and right. So I acquired the company with him. His job was continue to run the company. My job was to produce, right? And produce I did. And so I went all in into multifamily because I had a history in that. And that was a great concentration. My coach and I, my real estate coach, we decided that was the asset class of the future for a whole bunch of reasons that I've done videos on. And so I did that under Coldwell Banker Commercial for another 10 years. Sold my franchise back to my partners and just started my own little firm, Beau Beery Multifamily Advisors, in January.
That's awesome, man. Well, congratulations. That's a big milestone, man, and definitely a big undertaking. So that's huge. But I want to highlight your background here and spending time as an acquisitions lead for 10 years, working with the investment group, and then you transition into the investment sell side. It's such a critical background and experience that you have transitioning into the investor sell side, because for us on the acquisition side ourselves as investors, there's our number one objective is to build relationships with you on the other side of the table as a broker, right? And I think a lot of people don't realize this, that you as a broker, you're representing your seller, right? You're trying to make this a transaction, but in part of that, you're also trying to represent a good qualified buyer and build that relationship and ultimately make this a smooth transaction. So without that background and experience, though, from the investor side on the acquisitions, I wonder, do you think that affects, brokers on the investment sell sides to be able to make that connection with investors in today's marketplace?
You mean having the background of having worked for a principal who purchases and invests?
Yeah, exactly. Because a lot of these brokers that you see, right? Look, they're young, they're hustling, maybe they're out of school, and they jump right into the commercial investment sell side, but really don't have that experience as on the investor side.
Yeah, I think the biggest number one thing that has become my benefit as someone who now sells real estate instead of investing and managing it is empathy, right? And when you think about how powerful that word is, it's a boring word, okay, to say on a podcast, right? Because it's not something that you can just go out and buy or learn. Empathy is a lot of what I wrote about in the book, right? Because having invested and having worked for a principal for 10 years, I know all the things that come up during due diligence. I know how to underwrite. I know how to go and find the debt. I know the difficulties with that. I know what to look for on the management side. I mean, I know down to what I hate about some assets and what to look out for from the physicality standpoint. I know what it means to hire and fire, the leasing people, the landscapers, phase one, how to work with the phase one consultants and the PSA guys. And so my point of all this is when I'm working as a selling broker, right, a listing broker for an agent, and I'm working with lots of buyers, I understand the process. And when things come up or when they write offers and they put certain terms in there that may be peculiar, I know why they're doing it. When something comes up during due diligence, I don't automatically say, screw you, you got 10 guys behind you, get the fuck out of the way. Right. Mm-hmm. Like I can dive a little bit deeper and then sort of transfer that knowledge right to the seller and try to impede, the empathetic mind into the seller. Let's look a little bit deeper into this and make a wise decision, because in the end, I just want my seller to earn the best price and terms. Sure. But I want to close. That's the number one thing is we got to choose the right person who has a consistency to close, who has motivation to close, and who has the experience of having closed. It's a big deal.
Well, you're the facilitator, right? I mean, you're basically the lead facilitator of this transaction, and you're putting these pieces together to make sure, like you said, it gets to that big day, the signing day, where this thing closes and trades hands. But I think
I spend a lot of time. So I spend a lot of time trying to train buyers on what makes them look most sexy, right? Because while I only work with sellers, it just behooves me to train as many hundreds and thousands of investors through YouTube and book and all this stuff as I can. The more trained investors are, the more deals we're going to do. It just makes things much easier. And unfortunately, this business is very unforgiving. You only get one chance to make a first impression. If you're a newbie and you call me and you say you're a newbie, you're already dead, right? I've already marked you in my CRM as a newbie. And so when you go in to turn in an offer, like, who am I going to choose? The newbie or the guy who I just did 8 transactions with? Yeah. Right. So there are lots of things you have to learn in this business, from a newbie to an intermediate guy, to say and not say, what to write in the letter of intents, contracts, all these things. And so if I can give you all this knowledge up front as much as possible, it just makes you look sexier. And this whole game is about how you getting chosen in a multiple offer situation. More importantly, getting chosen by the broker before the deal even comes out, being one of the first 10 or 15 people they call.
Yeah. Well, let's dive into this further, Beau. I'm so glad you brought this up. And you actually wrote this book. You mentioned, right, multifamily investors who dominate around, I guess, this topic, like guys who are just really excelling and building that reputation and credibility, to continue to transact with guys like yourself. So, it's no secret, man. There's 1,000 new syndicators entering the space every single day, 1,000 programs out there now that are just pushing out, new generation syndicators. And so the hard part is, how do you distinguish yourself and make yourself credible, especially when you're first starting out? So talk to us a little bit more about how you are nurturing and educating new investors coming in the space and how they can develop that credibility and reputation with you.
Yeah. The most important thing I encourage is newbies cannot, well, I should not say cannot, because it's happened, but from a statistical outcome, you have a much higher probability of success in this business and faster success hooking up with a mentor. You have to partner with someone who already owns assets, who already has liquidity, who already has debt relationships, property management relationships, contract relationships, right? Because when you're calling up brokers for the first time, or you're submitting your first offers, we need to know who you are so that we can sell you and or your offer to the seller. And if you call up and say, my name is Cody Laughlin and I own a duplex in Texas and I'm after your 30-unit complex in Jacksonville, Florida, and you can't name 6 guys you've ever done debt transactions with, you have no letters of recommendation from brokers, you've only been managing that duplex for 6 months ago when you bought it, you have no chance, right? Because I already have 15 offers, 13 of which are from absolute murderers in this business, right? People who do this on a regular basis for the last 20 years. But if Cody calls up and say, hey, my partner Brian and I, we own Blue Oak Capital, and together we own 620 units in 2 states, and 3 of those assets are in the Jacksonville market, Beau. Here's our criteria. Here's what we're looking for. We look forward to working with you on this transaction. By the way, our last transaction was just done with John Smith, the broker over in Tallahassee. I have a letter of recommendation from him. We do a lot of our debt with Greystone, and we like Gil Dolan over there. Like you can name drop. You can see how that has a whole different landscape, right? I know automatically I'm dealing with guys who can make me look good, right, to the seller, and who can close. And the better you look and the more you close, then the easier it is to do that second transaction with that seller. The easiest transaction you'll ever do in your whole life is doing a second deal with the same guy, right? So after you and I close on a deal with John, the seller, how easy it is for Beau Beery to call up John, the seller, and say, John, listen, these guys over Blue Oak, what a great job they did, right? So you own 2 assets down in Orlando that are very similar to Pine Rush that just bought. Why don't we just see what they'll pay? I mean, they paid the right price. They just beat out 11 other guys on this. Would you entertain a quick offer? Yeah, I like those guys. Like, they were legit. Take it to them. Beau, I'm not giving you the listing. I don't want you to go out to market. Don't talk to 45 guys. Talk to Brian and Cody. I'd be willing to talk to those guys, right? Easiest transaction. I've done a number of those. And by the way, if that doesn't happen, if John, the seller, says no to that, he still at least has a positive reputation in his mind about you guys, so that when, Pine Rush Apartments comes up again in Orlando in 2 years, when his debt's coming up for maturity, one of the first people he's going to be thinking about is how good of a transaction it was with Blue Oak. Hell, he may not even call me to list it. He may just call you directly. That usually doesn't happen, but it's a possibility.
Cody, there's so many nuggets that were just dropped in this. I'm excited we're having this conversation because we get asked this all the time, right? How do you get your first deal done? How do you get your foot in the door?
You got to hook up
Beau
with
just,
people, man.
He just
and you may have to give up, the vast majority of your equity, of your returns, of whatever. But you have to go through investing university first, right? Yep. I mean, the person who's really good at finding, if you're a newbie and you're super at finding assets, that has a little bit of weight. But if that's all you've got, even if you're someone who's worth $10 million and you haven't done any deals yet, that still is not a whole lot of credibility, right? Because there's still so much you don't know.
Brian, you had a point you were making.
I was just saying this is a phenomenal conversation, and I hope people are taking notes because Beau is laying out the script here for if you're a newer investor trying to get your first deal done. It's so much more than just submitting the right offer, right? It's not always the highest price that wins, because if the highest price is some newbie who didn't do all the things Beau just mentioned, you're not going to get the deal, right? And we saw that in our last transaction, Cody, where we weren't the highest bidder. It was a relationship. We were local. We had done all the things that exactly what Beau had just said to get that deal over the finish line, and we were awarded the deal, correct? So I don't know. It's just a phenomenal conversation. I'm taking great notes, and I hope our listeners are too.
And when I look at the profile of all these elite investors, and in my markets, I cover the northern half of Florida. When I talk about elite, I'm talking about guys who do a shit ton of transactions per year. They're buying and selling constantly. They've been doing it for 10, 15, 20 years. A lot of their makeup is they've actually worked for investors like me. Like they were in a salary position. They were acquisition guys. Maybe they were asset managers. They've cut their tooth while in a safe salaried position, and then they've learned the game and they've graduated, right? It's not often someone who had a high paying job and then bought their first quadruplex and then it turned into a 10plex and then turned into a 100plex. That happens, don't get me wrong. But the fastest way is whether you are not in a salary position or not, is hooking up with someone who's doing it and learning their trade and just kind of being their runner. If you have to get their laundry, go get their laundry, but then tour with them during the due diligence period and travel with them around and see how they underwrite, ask them to show you the spreadsheets, do whatever you can. And I'm telling you, man, especially if you can be right hand with that person, you will accelerate way faster than someone else.
Yeah, I completely agree, Beau. And this is the downside of having so many of these mentorship programs out there right now, is because you hear the flash, you hear the guys that are doing, 5, 10,000 units, that however many transactions a year, you hear all of the wealth that's being created in multifamily, which is drawing in this new investor base. And they'll teach you how to underwrite and analyze deals and all that good stuff. But what they don't teach is how to lay out the framework of what you just mentioned. How do you establish the credible relationships you need to actually get into the business? And by the way, it doesn't happen overnight. How often do we hear, Brian, just call your brokers and just take them out for coffee? Look, I haven't taken a single one of my broker connections out for a single lunch, not because I don't want to, but because when you talk about building a relationship, let's go get a deal done. Let's go transact. Now we have a relationship. Then we can go take you out to lunch. And so, the point is I think people spend too much time and effort on the wrong things that really aren't helping to advance or build their credibility, as you mentioned. So I'm really glad that you brought all this up, because it's timely. And like I said, there's 1,000 new people in the space every single day. And everybody's asked the same question. Well, how do I stand out? How do I make myself different? Well, you just dropped a big bombshell on everybody if they're not paying attention already. So it comes down to relationships, like you said, for sure.
Yeah. And there's going to be people who are watching this who are saying, I own 300 units and I did it all by myself and I didn't have to do that. Great. I'm just talking statistical probabilities. I'm a math guy. I'm all about numbers, right? You can do it the hard way or you can do it the easy way, right? And the hard way, like for instance, what I talk about in the book is networking with brokers, right? Brokers are doing, in my markets, 92% of every transaction over 10 units, 92%, right? And it ain't that much different in any one state in the United States. That's how it is, because if you own a $10 million asset, why would you entertain an offer from some guy who calls you randomly off the street when you can call Beau Beery and get 15 offers in 3 weeks, right? So it's not a broker thing. It's just a common sense thing. And so if that's the case, your whole world should be about calling brokers. If you want a hard life, try to call sellers directly and do deals. You may have a more higher profit per deal, but you're going to do one deal every 2 years. I know guys who do 15 deals a year all the time for 20 years, and all they do, they've never called a seller. They're calling 60 brokers regularly on a consistent basis through their CRM, whether the top producing brokers down to the guy who only does 1 or 2 deals a year. All they do all day long is they're just networking the brokers and talking to them and getting to know them. You can imagine over a 20-year period, you're talking about not just business, but you're talking about wife and kids and husbands and hobbies and what you do over the weekend. And you get to know each other on a whole different level, right? Mm-hmm. And so the guys who've been consistently calling me every 30 to 60 days for 10 and 20 years, and I get a call from a seller want me to do a BOV, who do you think I'm calling before I've even gotten a damn listing agreement?
Yep.
I'm calling the 5 or 10 guys who I've been talking to for 10 years who care about me on a whole different level, right?
Yeah, absolutely.
That's the kind of game you want to be playing right there.
Yeah. Yeah. And you dropped another big nugget there. And this is something that we preach all the time. There's a lot of guys that are out there trying to do the off market direct to sellers campaign. Look, I mean, you're talking about small business owners, right? You're talking about professionally operated businesses that are being traded here. Not we talk about the real estate, but these are more sophisticated business owners that have professional management teams. You're not just going to call them up and say, hey, sell me your deal. It doesn't work like that. So you guys in building this relationship, to me, is the fastest funnel to really get a level of scale that you're looking for.
Well, and what I have found, Cody, is that the mentality of trying to do, quote unquote, off market deals, and we can talk about that definition, or doing deals directly with sellers, it often comes from people who have grown up in the single family rental business, the duplexes, the quadruplexes. Like in that world, it is far more likely or possible. I think it's still I think probably more than 50% of deals are done by residential agents in that world still. But it's still easier and far more likely, probability wise, to call someone who owns a quadruplex and say, hey, my name's Cody. I'm an investor here in Tallahassee. I saw your quadruplex over on 123 Main Street. I'd love to make you an offer and do a deal. Totally more possible, right? Because the guy who owns the quadruplex maybe owns 2 or 3 other quadruplexes and not something he does on a regular basis. He doesn't do 10 transactions a year. He doesn't know the world craves multifamily. The guy who owns 20, 30, 100 unit complexes, this is what he does. Mm-hmm. He knows the world, right? Cody calling me off, from out of the blue and saying, I'm Cody. I don't care how many units you own. Again, why? In fact, if I'm going to entertain an offer in that manner, I'm going to want well above what the property's worth for the right to not go to market. Mm-hmm. Mm-hmm. That guy's not going to give you, oh, Cody, I love you so much. Your word game was fantastic. You seem like a great guy. I'm researching Blue Oak right now online while you're talking to me. Yeah, you guys own a lot of assets. I'll entertain an offer from you. Let me give it to you for 10% off. It doesn't happen. It doesn't exist in this world, right? The people who you hear about an off-market deal, what they think happened is that a broker brought them some deal, made them feel like they were the only human being on earth that ever saw this listing, and they bought it. The reality is that if a broker gets an off-market listing, meaning the seller may have given him a listing agreement or didn't, but just doesn't want it on a bunch of websites, doesn't want to email blasted to all over the world because he doesn't want his staff or tenants to find out. That is what off-market means today. But when a broker gets that kind of listing, he's still talking to dozens and dozens and dozens of buyers. He's just making you feel special that it's not on a website. But it's his job, lawfully his job, to bring the highest and best offer to that seller. If the seller knew he just called Cody, okay, that doesn't work out. In addition, the seller is not going to entertain an offer just from Cody. He wants to know that it's been at least exposed to some really good buyers.
Yeah, I'm so glad you laid this out, man. I'm so glad you defined this because, again, there's such a false rhetoric around that definition of off market, and people that spend time chasing that false rhetoric just end up very frustrated and just really left in the dust because, as you just clarified, I mean, it's not that discounted rate and, whatever. Yeah. That's just, it's hogwash, man. It's just crap.
The only ones that, the only true, what I would call a true off market deal. And I've done them. I mean, they happen. I just wouldn't create your business plan around it, is Cody calls up Beau and says, Cody, my partner Brian and I, we were driving through downtown Jacksonville on vacation the other day with our wives. We saw this apartment complex over on, Toggle Street, and we saw the grass was a little bit higher. It was in a good location. It didn't look like it was being maintained well. Here's the address. Beau, do you know this guy? And I go into my system. I'm like, oh yeah. Betty Smith owns that. I've talked to her 5 times. She's been wishy-washy. She's getting a little bit older. We might want to reach out to her, right? And so I call up Betty and say, hey, Betty, Beau Beery, listen, a couple of partners that I know that I've done some business with, they're actually vacationing in town there. They saw your apartment complex. I've done 2 deals with these guys before. They're legit. You probably get these calls all the time, Betsy, but they'd love to make an offer. Would you entertain one? And in the off chance, right, that she says, sure, and we do a deal, that's what I would call a true off-market deal. And I've done those before, right? You're still going to have to pay. Betsy ain't giving you a 10% discount. Betsy probably knows the market, right? And so, but you at least didn't have to compete. There wasn't best in finals. I wasn't going to come back to you 2 times to raise the price, right? And I still think you should be open to doing deals like that. I just wouldn't create a business plan around finding a Betsy.
Absolutely.
Right? Yeah. You're much better trying to network with every broker on the planet and regularly checking with them every 30 to 60 days, building a relationship so that you are who they think about when they get that call.
Yeah, 100% agree, man. Absolutely agree. And just for clarification, okay, because we've mentioned Blue a couple of times, we are the good guys, okay? We're the guys that you do want to talk to. Just make sure.
That's right.
Our new days are way past us now, but no. So listen, Beau, we've been talking a lot about, the newer investor and building that credibility, that reputation. How do they really establish that rapport with you to find opportunity? Let's kind of look at the landscape as a whole right now. I mean, before COVID, obviously we were a very bullish market. Post-COVID, way more aggressive. Yeah, I mean, I don't think anybody could imagine it really accelerated the way it has. Tell us a little bit more about what you're seeing in the marketplace right now, because even experienced buyers are having issues, getting deals awarded and whatnot. I mean, it's an aggressive market right now. So tell us a little bit about what you're seeing and how people are standing out in today's marketplace.
So I will say, first of all, that, the quote unquote high sale prices that you see now, I did an analysis and determined that it's not an exuberance creating this. The metrics are there. Rents have really gone up, right? And rents have gone up because there's low supply, and there's low supply because we can't build enough number of units for the demand. So as a baseline, it's still pretty healthy. I mean, we've heard the words bubbles a lot, but bubbles may happen in the housing market because you can deliver a hell lot more houses sometimes than you can apartment complexes. Apartment complexes are hard to get approved. The entitlement process doesn't happen anywhere near at the light of speed that permits for a house does, right? Mm-hmm. And so over the next 8 years, we have to deliver 330,000 units per year in the US just to keep up the demand. That was the statistic 2 years ago. It's probably even more now, okay? The last time we delivered over 300,000 units was 1989. We might have done it in 2021. We'll have to see what the stats come out at. But my point is that we aren't going to keep up with demand, which continues to drive up rents for existing product, because existing product, as long as you're a clip below new construction rents, you can keep rising rents, right? Because, in other words, if new construction rents average $1,800 a month, which they do in my markets, and you have a 1970 product that was $1,100, you could value add to $1,300, $1,400, $1,500 a month. You can get huge jumps because as long as you're $300 a month under a new construction guy, they'll pay that. They'll pay high rents for an existing 40-year-old property, right? Mm-hmm. So anyway, my point is a lot of the metrics have created the higher sale prices. Now, have people been willing to accept lower returns? Yes, that's happening also. So the market has gone from, I want an 8% cash on cash return the day I closed based on historicals, to I'm okay with earning a 6 to 8% cash on cash return by the end of year 2, right? Now, that's not wrong. Let's look at this a little bit, okay? I think we just had high expectations historically to think we could earn 8% cash on cash returns day one. When you think about it, if you're someone who holds an asset for 5 years, 10 years, and the longer the better, what the hell does it matter if it took you 2 years to get to a 6 or 7% cash on cash, right? Because when you go to sell an asset in 10 years, right, and you made $8 million, does it matter you lost 300 or 400 grand in cash flows as you were building up rents and putting in renos over a 2-year period versus having that cash on day one? No, you don't give a shit. The same reason it doesn't matter when during due diligence, if a $150,000 issue comes up and you're battling ad nauseum and you're about to lose a deal, when in 5 years you're going to make $4 million, it starts to become really silly that you fought over 150 grand. It starts to become really silly that you tried to earn a 6 or 7% cash on cash day one or within 6 months, right? So I just think our brain historically had been used to, okay, you buy real estate, the tenants are going to be paying your expenses and your debt, and you're going to have principal reduction, you're going to have these wonderful returns, right? And so the reality is that the people who hold the longest can beat out syndicators all day long because they have a whole different frame of mind. The reality is the syndicators and partnerships are churning and burning every 4.5 years. I just did a study. My team spent 24 hours putting together a study where I studied 7 years of closings, and the median hold period at the time of close was 4.5 years. The average was like 8.5 years, but that takes into consideration people who owned assets for 30 years, combined with people who only owned it for a year, right? But the median is what you want to look at, and it's been 4.5 years. And it's been consistent about 4.5 years for the last 7 years. Now, another reason why prices have gone up is just a lack of number of sales, right? So in any one market, only between 6 and 8% of inventory closes per year. So for instance, in the Gainesville market where I'm based, there are only 72 apartment complexes that are conventional over 100 units. So only about 6 deals a year close in my entire market over 100 units. Now there might be another 8 or 9 that are under 100 units, but my point is there's not a whole lot of inventory. Not a lot of people know that, because what happens is we're all connected to like-minded people on LinkedIn, right? If I go on your LinkedIn, Brian and Cody, probably 90% or 80% of the people you're connected to are also in real estate in some form or fashion, right? They're lenders, they're appraisers, they're investors. And what we do is we go on there and we go through our timeline, and this guy's closing on an asset, and this guy's closing on an asset, and this guy's taking a picture of himself doing due diligence, and this guy's taking a picture of the before and after, and this guy's taking a picture of the closing table, and this guy's taking a picture of him with his attorney, right? So the brain just sees these closings happening all the time, but they're happening all over the US. But the brain thinks that there's 500 closings of apartment complexes in Gainesville, Florida, with a 270,000 population. There's 300 closings every year. The reality is the trailing 5-year average is about 13 deals a year, over 10 units, conventional, student, and affordable combined. That's why I cover the entire northern half of Florida, because there's only about 200 sales in the entire northern half of Florida, which is one of the top 5 states in the country for multifamily, right? Because I have to have enough number, I have to capture enough market share, right, in order to earn the commission I want to based on the number of closings. So as an investor, you have to cover enough geography for there to be enough data points that based on the market share you believe you can capture equals the number of closings per year you can accomplish. So sometimes I'll get calls from investors who I know are newbies. They'll call me from Jacksonville, right, which has 1.6 million people. There's roughly 350 assets like that, over 100 units. And they're like, yeah, so my criteria is I want to buy conventional 100 plus units, 1980 to 2005. I don't like flat roofs. I don't want to be on the water, blah, 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 right? And I'm like, okay, but just Jacksonville, right? Because just so you know, there's only about 30 deals a year over 100 units in the entire market. And that doesn't count, of the 30, how many are in a location at which you would be shot at 2 p.m. in the afternoon. That doesn't count that a lot of those might be 1960s. That doesn't count the ones that were on the beach. That doesn't count the ones that were closed at a price that you would never even considered in the first place, right? So there's a whole lot less closings that happen in any one market you cover than you would ever know.
Yeah, that's a really interesting statistic. 6 to 8% of the transactional volume.
6 to 8, right?
So yeah, that's a pretty interesting statistic. But I think it goes to your point about understanding, number one, market dynamics and understanding the markets that you're in. It's rudimentary, but it's critical. But I want to go back to your point about, you mentioned the fundamentals of multifamily right now, and this is something that Brian and I are very big on research and data. We look at all the major brokerage shop list data that comes out, all the reports and such. And I'm yet to see a single source that has argued or articulated an argument that multifamily does not have fundamentals that can continue this demand of what we're seeing right now. Brian, I don't know. What about you?
Yeah, and I really want to highlight what Beau said as well about the investor expectations for multifamily as well, and sort of the anchor that a lot of investors have because of maybe what's happened in the past before multifamily really got discovered, where you were getting these 8, 10, 12% returns 10 years ago, and guys that have been in the game a long time, and maybe even passive investors who have been in the game a long time, are still expecting those types of returns, versus looking at the other wonderful benefits of multifamily, from the tax benefits to the equity upside and appreciation, all these little things. So definitely great conversations, I think, that are really important to highlight to both active and passive investors when it comes to expectations going forward on multifamily.
Well, Brian, go ahead, Beau. Go ahead.
I was going to say, those rents, Brian, back in those days, though, they didn't increase anywhere near at the same annual increases that we're having now. Primarily because the cost of homes, right? So home ownership is no longer like what people are able to afford anymore. I mean, the house prices are insane. We're now in Alachua County well over $300,000, and we haven't been over $200,000 in a long time, right? And so all the millennials are renting, all the seniors are renting, and so that increases the demand, that increases the rents. And so my point is that back in the 80s, 90s, and even early 2000s, right, even when you're able to get 8 to 12% cash on cash returns, the rents still weren't increasing as much, right? So here, to try to get to a 6 to 8% return cash on cash after year 2 is okay, because the rents are still they're skyrocketing, right? So it makes it up for himself. Now, the problem is a lot of these syndications are selling in every 3 to 5 years. So cash on cash is still important, but IRR is the big number for those guys, right? Because they get their windfall on the backside.
Yeah. And I think, Beau, to that point, that's the differentiator between what you consider the elite investor versus the novice investor, right? Where the guys that can see past just the paper metrics and the returns, and really look at the really underlying business model, and how do you reach that level of true wealth, right? And like you said, you buy the assets, you buy them right, you get good debt, you hold them for long term, and everything else falls in line, But you're exactly right. I mean, the syndicated model
cures all issues, man. I'm telling you, absolutely. The most powerful people that I talk about all the time in the book, when I look at their portfolio, they're typically long-term holders. And the bigger they get, the more units they own. You can imagine when they turn in offers, and I've got 15 offers, I'm able to talk to the seller and say, look, Cody and Brian own 7,000 units, right, spread out across the country. So they're not, these owners are not, churning and burning more than any one time. They only own 3 apartment complexes, right? I mean, that has experience. That's great. I'll do deals with those guys, right? But as you continue to build your portfolio, and you have this global, huge cash flow number, it allows you to be even more aggressive on purchases, because you're just massaging it into a machine, right? And so when a B plus asset comes up in an A location that you may have to buy at a 3.5 or 4 cap, which sounds insane, but it's in the pathway of development. It's a phenomenal location. And yes, you may, that investor who's considering it, who owns 6,000 units, may know that he may have negative cash flow for a year and a half. He can absorb that into an engine of cash flow and not even feel it.
Mm-hmm.
Like, he doesn't even feel it, right? But he knows in 2 to 3 years when he's finished his program, he's killing it. That's another reason why the long-term hold is just massively important.
Totally different mind.
But not many people do it.
Yep. Brian, I mean, look, we've said it over and over, right? It's you just whispered it. It's a completely different mindset. It's a completely different sophistication level, and that's why these guys are the elite investors. That's how they've reached that economies of scale.
And it's hard for investors, for syndications, to find investors who have that frame of mind.
Yeah, it is exactly right.
A lot of the investors still don't trust you yet. They've heard about you. Their friends have told them about you. You know, they're only going to invest 25 grand this time, and then maybe next time it's 100. And as they get to know you, they're more comfortable. But you're always needing new investors. The investors, they want to be compensated in 3 to 5 years. They want to make sure that you're legit, that you know what the hell you're doing, and that you have a couple wins, right? But unless you start a fund whose prospectus says we are 5, 10, 15-year holders, it's tough.
Mm-hmm. Yep. Well, Beau, man, you dropped a shit ton of nuggets here. I mean, we've covered a lot of ground here.
Good.
And I mean, just a lot of wisdom here. I want you to whip out your crystal ball real quick before we wrap up here. And, look, we're entering in, like I said, we just came off the tailwinds of a very aggressive cycle, or a very, really high transactional volume in 2021. 2022 is off to a pretty good start already, but we are in a rising interest rate environment. There's this European conflict that nobody knows how that, like, what indirect impact that may have on us. What do you think is going to transpire in the multifamily space for 2022?
I mean, 2022 will continue to be hot. I mean, I don't think that's going to change, but I'll even go even further than that and stick my neck out there, because there is such a shortage in housing, and home prices will continue to be very, very high. An entitlement process of getting development deals done is very difficult. And because interest rates will still, even with the increases, continue to remain low, I think the worst case for the next 5 years is, obviously we can't have the same trajectory of rental increases we can't have double-digit rent increases per year. Mm-hmm. There will be enough inventory that does come on through construction where it will start to stabilize. I think the curve will go from this to this, but I don't think it's doing this for a long time, right? I mean, it just can't. You have to so overbuild, combined with terrorist attacks on U.S. soil, combined with huge increases in interest rates in order to sort of reverse the need for housing, for affordable type of housing. So I think for the next 5 years, we'll get to more normal rental increases, but there's still going to be very high demand on sale prices. I still think cap rates will remain relatively low. We may get into the low 5s at some point, but it's still going to be very, very sought after, a very safe place to be. I went from being a generalist commercial real estate guy doing office, retail, industrial, and multifamily, and I threw my whole game into multifamily 10 or 12 years ago, right? Like, I went all in, and I'm not a guy, as you can tell, who just does that because that's the hot thing to do. My coach and I, my commercial real estate coach and I, we spent a lot of time auditing my business, auditing the world, my markets, my sub-markets, to determine what is the asset class we want to go all in on, concentrate on, that will take me from, at the time, a 34, 35-year-old to a 60 or 65-year-old very comfortably, right? And I'm now 46. And I know that for the next 10 to 20 years, if I decide to go this long, I'm good.
Freaking Beau, you're 46. You look younger than I do. Sure. But hey, Brian, all I heard from Beau right there is just continue to buy. We need buy. Keep building these relationships, man. Long-term wealth, that's where it's created. So,
and dude, it's like, you only need a few. Listen, you only need a few complexes when it's just the two of you, or the two of you and a few other people, to change your lives, right? It takes more when you're a syndication and you're paying out a lot, you know, a lot of the preferred returns, and you don't have much of your own equity in there. But the people listening to this, you know, you don't have to be an elite investor doing 10 or 15 transactions a year. I'm just telling you what they've done in order to kill it. And if you're just doing 1 or 2 a year, if you do 1 or 2 every 2 or 3 years, and you're doing the right ones, it changes your life, right? Yep. It changes your life. It's fantastic.
Absolutely. Absolutely. Well, Beau, as we wrap up here, man, I want to give you a few minutes to go ahead and highlight the book and tell us a little bit more about that, and then a little bit more about where the audience can learn more about you and what you have going on in your business.
Yeah, sounds good, man. I'll take under 1 minute. 3 ways you can reach me or follow some of my stuff. Number 1, my website is beaubeery.com, BEAUBEERY. And the reason you want to visit my site is for a couple of reasons. Whether you invest in Florida or not doesn't matter. You want to go to my site because on my landing page, you will see a whole bunch of stats, really good information. I'm very, very stats driven. My landing page, you can scroll through and see some cool stuff. But more importantly, when you click on resources at the top, I have letter of intent templates, cover pages, all kinds of interesting reports that people have loved. And then you'll returns after per cash on cash we go after. I poll hundreds of people on LinkedIn that have those results on there. I have Q&As on there for investors, but I also list all the markets that I cover in Florida. And whether you're in Texas or California, the reason you want to visit the markets that I cover is I want you to see the kind of information I put out there. If you can master that information for your markets, you will be a killer. Because 2 things are happening in this market. Investors, great investors, are getting called by brokers ahead of time, number 1. Number 2, they've mastered their markets. They know in seconds when an asset comes available, they know exactly what it's worth. They know what it's going to be worth in 4 years when they go to sell it. They know what the renovation costs are going to be. They know what lenders they're going to call. They know the property managers. They know all this stuff. All the buttons that I have on the markets on my website, you want to master those buttons. All right. The second way is my YouTube channel is Beau Knows Multifamily. And I have playlists on there for beginners, for advanced level investors. I have data analytics. Every now and then I have new listings that I'll put out there and not tell anybody about, right? Just to put people out there, but it's really good stuff. No fluff. All my videos are edited down to where you hear nothing but the meat and bones, not pauses and uhs and all kinds of stuff. And the third thing is you do have to get my book, man. And I'm not telling you this because I make a bunch of money. Anybody who's ever written a book will tell you, you don't make a bunch of money writing a book. I'm telling you because this is like every broker's, is dumping into this book the inside. It's an inside look of how sellers are choosing buyers, how brokers are choosing buyers, how deals are being done, sort of undercover, but you don't even know about, right? Like when I show you 100 closings that happen in a market and you look at it and you only knew about 4 of those, it's because you're doing everything wrong. You want to know about at least 80 or 90 of those transactions. That's what the elite. The difference between the elite and a lot of people on this call is that the elite are seeing every deal. They're at least having a shot at it, right? If you only have a shot at 10 of 100 closings, yeah, it's going to take you a long time to build a portfolio. But if you have a shot at 80 closings a year, whole different ballgame.
Absolutely. Well, great stuff, Beau. And I know Brian and I will definitely be checking out the book. We were talking about this before the show. Love your YouTube presence, man. You got a great channel there. A ton of nuggets. I think that's where I actually connected with you however many months ago. So love what you're doing, man. Keep it up. Want to thank you for being on the show with us. Thank you for dropping so much wisdom. And we definitely look forward to staying connected with you and learning more about Florida. So appreciate your time.
Yeah. Thank you for the good audience.
Thank you.